All right, let's dive into one of the most baffling, just absolutely mind-bending stories happening in crypto right now. We're looking at a project whose chart is sending signals that are polar opposites, a total paradox. And together, right now, we're going to decode exactly what's going on. And this quote from FX Pricing, man, it just nails the mystery, doesn't it? At first glance, the chart looks like a total catastrophe in the making. But if you look a little closer, there's this one signal just screaming that a massive, powerful move is actually building. It makes no sense. And here it is, the heart of the paradox. On the left, you've got the RSI, the Relative Strength Index, hitting 77. Now think of this like the tachometer in your car. When it's in the red, it's screaming overbought, telling you to slam on the brakes. But then, on the right, you've got the ADX, which measures trend strength, hitting over 40. That's like your speedometer, and it's telling you a really powerful trend is picking up speed. It's flooring the accelerator. So the big question is, how can you be redlining and flooring it at the exact same time? To solve this mystery, just staring at the chart isn't going to cut it. The contradiction isn't really in the market signals at all. The real answer is hidden deeper. It's in the code, in the fundamental mission of the project at the center of the storm, Qubic. This brings us to the million-dollar question, right? Are we looking at a classic speculative bubble that's just seconds away from popping? Or are these the messy, chaotic signs of a major breakout that's just getting warmed up? The key to unlocking this whole puzzle is understanding what makes Qubic so different. See, it's built on a concept that tries to solve one of the oldest criticisms of crypto, this idea of useful proof of work. You know how traditional crypto mining works, right? These giant warehouses full of computers are solving incredibly complex, but let's be honest, ultimately pointless math problems, all just to secure the network. Useful proof of work, or UPoW, completely flips that script. It asks a really simple question. What if all that incredible computing power could be used for something, well, useful? Something productive like training artificial intelligence models? So this is crucial. Qubic isn't just another digital currency. Its real goal is to be a massive, decentralized supercomputer for AI. It was founded by Sergey Ivancheglo, a heavy hitter who also co-founded IOTA. The whole network is secured by a set number of validators. They call them computers, which allows for transactions with no fees. The mission, top to bottom, is about turning raw computing power into something with real-world value. So you have this really ambitious AI project. Great, but what on earth does that have to do with this crazy, chaotic price chart? Well, here comes the catalyst. And believe it or not, it involves a partnership with one of the most famous, or maybe infamous, names in all of crypto. This partnership is everything. Under the old model, Qubic's network was basically trying to do two things at once. It split its power between mining Monero and training AI. It was inefficient. The new model with Dogecoin is a total game changer. See, Dogecoin is mined on specialized gear called ASICs. This completely frees up all the network's powerful CPUs and GPUs to dedicate 100% of their power to AI training. It's not just a simple coin swap, it's a fundamental redesign that lets two very different jobs run at full blast, in parallel. And they're not just flipping a switch and hoping for the best. This rollout, kicking off April 1st, is a super deliberate three-phase plan. First, they test the Dogecoin mining in the background so nothing breaks. Then, they let the miners, the computers, start migrating over with incentives nudging them in the right direction. And finally, Monero gets phased out for good, leaving the network in its powerful new final form. So, while the flashy headline is Dogecoin, the real story? The thing that actually matters here is this. This move literally doubles the amount of computational power available for Qubic's main mission, training artificial intelligence. Okay, so a massive technical upgrade is coming. That's the fuel. Now let's connect that fire back to that wild chart and see how the market is actually trying to process all this news. And these numbers, wow, they just paint the picture perfectly, don't they? You see this insane 83% gain in just a week and over 117% in a month. That's the market getting hyped about the Dogecoin upgrade. But then, at the same exact time, the price is still down a staggering 93% from its all-time high. This is the war between past baggage and future potential playing out in real time. And just to give you some scale here, during all this craziness, Qubic's market cap was hovering around $119 million. So it's big enough to have serious trading, but it's definitely small enough that news this big can cause these absolutely massive waves. Okay, so let's put it all together and solve the paradox. That powerful trend signal?
That's the investors buying into the fundamental story, the doubling of AI power. But the overbought signal and those scary price drops, that is classic sell the news behavior. It's the short-term traders who jumped on the hype train, and now they're taking profits and getting off before the actual launch date. So you have two completely different groups with opposite strategies colliding in the market at once. No wonder the chart looks like a mess.
But there's this other, really clever economic engine built into the new model. The Dogecoin that gets mined isn't just a reward. The network actually sells it on the open market and uses that cash to buy back its own Qubic tokens. This creates this constant external buying pressure, a self-reinforcing loop designed to support the token's value. All right, let's zoom out. This whole episode with Qubic, it's so much more than a story about one coin's crazy price action. What we're really watching is a high-stakes experiment that tells us a lot about where the entire crypto market is heading. So what are the big takeaways here? Well, first, we've seen that major tech upgrades are rocket fuel for speculation. Second, those old sayings, buy the hype and sell the news, are incredibly powerful and often conflicting forces. But on a deeper level, what's really happening is that this whole idea of useful proof of work is getting a real-world stress test at scale. The story of Qubic is a perfect case study in how a market desperately tries to figure out how to price the promise of future utility. And all of this leaves us with one final big question to think about. For years, the debate in crypto has always been about who's the fastest, who's the most decentralized, who's the most secure. But the Qubic paradox suggests maybe we've been asking the wrong question. Perhaps the future of crypto won't be won by the most secure network, but by the most useful one.